Okay, everybody, it is me, Gregory Mannarino. It's still Friday, August 20th, 2021. This is my post-market wrap-up. Well, the last one of the week, and what a week it has been, sincerely. We started out with a record high on Monday. The market sold off a couple of days, but that, as we expected, the dip did get bought up. A nice little rally here on Wall Street today. Yesterday, all kinds of buying when the stock market was dipping twice. I covered all that with you. It's not going to stop. However, the odds of a pretty big stock market crash just went up. And I'm going to talk about that in just a moment here. Let's focus back here on the market just real quick. Okay, so a rally across the board with the stock market today. No surprise to you if you follow this blog. Okay, 10-year yield 1.25. Nothing going on here. Nothing at all. No danger zone. No flashing red. Nothing like that yet. Okay. We got the dollar today, which was higher earlier. You know, we had the fear trade on earlier. I told you. I explained to you in the video I did this morning. It looked like a fear trade to me. You had, the 10-year yield down, dollar higher, and stock futures were in the red. Anyway, look how we turned out the day. It's kind of interesting. It's uncanny how this stuff plays out. Okay, with that aside, let's move forward here. Silver fell about 1% today. Gold about flat. People, I hear your frustration. I know so many of you continue to write to me every day about gold and silver. Now, you know my take on this. It's not going to change. These are not trades. If you are frustrated with the pace of gains with regard to gold and silver, which are being absolutely, completely and totally 100% rigged by JP Morgan. We know who's doing it. Everybody knows who's doing it. The commodities exchange is well aware of it, but they will not do a thing. Nothing. Okay, this is just the way it's going to go. But I see that, to me, as an opportunity. If you don't, then you really are in the wrong space too. Look, investing in anything, putting money to work in anything is not for everyone. Some people need to work a 9-to-5 job, collect their paycheck, and don't invest in anything. There are people like that. Me, that's not me at all. You know that. I believe most people who follow this blog at least realize the situation that we are in, a hyper bubble with regard to debt, a stock market which is also a mega hyper bubble. The distortions of asset prices, the rigging of it all, commodities in general. But there are some people that just can't handle it. And believe me, I get it. So if this is getting to you, I don't know what to tell you. It doesn't bother me at all. I don't care. I've been buying gold and silver for many, many, many years. And I still believe 100% that I am in the right spot with regard to physical assets. Gold, more specifically silver, platinum and palladium, I like them too. But you have to understand what we're doing. And I think most of you get it. As I said, I believe earlier today, markets run in cycles. Generally, they run in cycles. Risk on, risk off. Risk on, risk off. We are in the biggest engineered risk on environment in the history of the world. And this started with the meltdown of 2008, quantitative easing 1, quantitative easing 2, Operation Twist, and all the continuing asset purchases and debt suppression by the Fed. This is all engineered, 100%. The re-inflating of a housing bubble, the re-inflating of a stock market bubble on the back of the Frankenstein mother bubble of them all. And that is the debt market. So people like us that are holding hard assets, gold and silver, we understand that at one point, and there's no way to stop it, okay, it's going to happen. Risk on, cash going into the market. is going to turn risk off. And when that happens, you're going to see risk off assets like gold and silver, for example, skyrocket. Skyrocket. That's my opinion. You're entitled to have yours. All right. That's the way I've been calling it for the longest time. And I'm not alone. There's a lot of people in the know saying the same things. Okay. Let us move forward here. Cryptocurrencies, people are surging. All right. You knew all this from the low. I told all of you right here on this blog many, many times, buy the dips. Buy the dips. How many times did I say buy the dips? Okay, I'm telling you to buy the dips in everything until we see the real sign or the real signal, and that is the debt market. Again, I keep saying the same thing. It's the 10-year yield. Oh, by the way, I know a lot of you have been trying to follow the 10-year yield on my website, which has been very on and off the last couple of days. I've been on the phone with these people who set up my website myself. I've been working on it. I think I got it figured out. So go check it out, traderschoice.net. It should work fine at this time. You can follow the 10-year yield, the dollar index, crude oil, there's charts, a chat room, all kinds of free downloads. Take advantage of it. Okay. So I covered the markets for you. Nice rally. Debt market not doing anything. Dollar went from being stronger to weaker. Okay, whatever. I covered gold and silver. What's going on here? I understand your frustration. Cryptocurrencies surging. Crude oil continues to fall under pressure here. People, look, if you follow crude oil, you know anything about technical indicators. Crude oil is now about 2 standard deviations away from the mean. Okay, when I see that, I kind of like it, actually, because it means you're going to see a reversion to the mean. And I believe that is going to happen. No asset goes straight up without a pullback. Pullbacks are bullish. All right. We topped out short term, topped out around 72, 73, 74. We've now pulled back. I can't stress this to you enough. In my opinion, and this is just my opinion, I could be wrong. I'm just telling you how I feel. All right. We're going to establish a new floor and crude will go higher. And not because it's oversold, or really not even because it's 2 standard deviations away from the mean, but because they're going to prop it up. They have to. In order to get this market to go up, they're going to prop it up. We've seen this over and over again repeatedly. You understand? I think you get it. Assets, they go up, they drop, and then they go back. Okay, that you establish that new floor. And this isn't just with crude or with anything that, well, technically and, fundamentally, that's how the market is supposed to work. Does it always work out like that? Well, 99% of the time, but there's all this rigging going on, especially with precious metals. We know that. And in crude too, it has no business being here. Now, I want to talk about this, okay? So, I know this is getting kind of long. We heard from the Fed again today. They're setting up a scenario to move goalposts, talking about the variant. I talked about that earlier today. Now, let's talk about this potential for a market crash, a serious market crash. There's something called a Hindenburg omen. If you're curious about the Hindenburg omen, I'm going to place a link in the description of this video. It's a technical indicator. It's not always right. As a matter of fact, it's right about 25% of the time. Okay. But when it is right, it's right in a big way. The last meltdown, 2008, was preceded by a Hindenburg omen. Okay? Now, we got a new one. We have a new Hindenburg omen right now. Right now. So does that tell me that this market is about to crash or crater? We did get several warnings from Citigroup, Goldman Sachs, JP Morgan. Okay. I'm not going to pay attention to the Hindenburg omen, and I usually don't. I'm more of a guy that wants to look at the debt market, because the debt market invariably, if you look at history, the debt market is right. It's always right, okay? So by keeping our eye on that 10-year yield, now if we see, like I've covered a billion times, a spike in that 10-year yield, that means a sell-off happening in the debt market, and we see a spike with the Hindenburg omen, well, we got to run for the hills. We got to close long positions. We got to think about getting short this market. But I'll keep you on top of that. I promise. Okay, so just don't worry about it. I want you to be aware that the odds right now of a stock market crash did go up. But I'm not calling for a market crash, okay? Because I know exactly what's going to happen. Greg Mannarino's calling for market crash. I've probably been the biggest bull for years in this market. I've been called a perma bull and everything else now. I'm just making you aware that the odds went up, okay? And we're going to see how this plays out, and I promise to keep you ahead of the curve. You follow this blog, you will stay ahead of the curve. I promise you that. All right, people, so here's the deal. It is Friday. Bring it in. Bring it in. We're going to do this together. Love each other. Care about each other. Be charitable. I will see all of you on Sunday for my markets look ahead. Tomorrow, you're going to hear from the Crypto Kid. And let's see what he has to say, too. Love you a lot. I'll see you Sunday.